Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 26, 2026, and we're diving into Chemed's latest earnings report for the fourth quarter of 2025. Chemed operates through two main subsidiaries, Vitas Healthcare, a leader in end-of-life care, and Roto-Rooter, a major player in plumbing and drain cleaning services. Joining us today is John, a senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. Chemed's diverse operations make it a fascinating company to analyze, especially with the latest financial results just released.
Revenue and profitability overview. Let's start with the top line. Chemed reported a consolidated revenue of $639.3 million for the fourth quarter of 2025, which is essentially flat compared to the same period last year. However, the adjusted earnings per share came in at $6.42, a 6% decrease. John, what are your thoughts on these figures?
While the revenue remained stable, the decrease in adjusted EPS to $6.42, down by 6%, indicates some underlying challenges. The GAAP EPS also saw a decline to $5.48, a 9% drop. This suggests that while Chemed is maintaining its revenue levels, profitability is being squeezed, possibly due to increased costs or operational inefficiencies.
Vitas segment performance. Moving on to the Vitas segment, which reported a net patient revenue of $418.8 million, a 1.9% increase. The average daily census increased by 1.3%, and admissions were up by 6%. How does this segment's performance impact Chemed's overall results?
The Vitas segment is showing positive growth in terms of revenue and patient metrics. The increase in admissions and average daily census is encouraging. However, the adjusted EBITDA margin decreased to 21.7%, down by 79 basis points, indicating some margin pressure. This could be due to changes in the acuity mix and Medicare cap impacts.
Roto-Rooter segment challenges. Let's discuss the Roto-Rooter segment, which faced some challenges this quarter. Revenue decreased by 3.7% to $220.6 million, and net income fell by 20.6%. What are the key factors affecting this segment?
The Roto-Rooter segment is experiencing a decline in both revenue and profitability. The adjusted EBITDA margin dropped significantly by 477 basis points to 21.5%. This decline is largely due to decreased residential revenue and increased selling, general, and administrative expenses. The segment is also facing challenges in water restoration services, which saw a notable decline.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $6.57 for this quarter based on a survey of two analysts. However, the actual adjusted EPS came in at $6.42, missing expectations by 15 cents. John, what does this miss mean for Chemed?
The miss on EPS expectations, although not large, indicates that Chemed is facing some headwinds that analysts might not have fully anticipated. This could be due to the operational challenges in the Roto-Rooter segment and the margin pressures in Vitas. It's crucial for the company to address these issues to meet future expectations.
Operational efficiencies and future outlook. Chemed ended the year with $74.5 million in cash and no current or long-term debt, which is a strong position. They also repurchased $174.6 million worth of shares. Looking ahead, the company has provided an EPS guidance for 2026 in the range of $23.25 to $24.25. How do you view their future prospects?
Chemed's strong cash position and lack of debt provide a solid foundation for future growth. The share repurchase program is a positive sign of confidence from the management. The 2026 EPS guidance suggests a significant improvement, indicating that the company expects to overcome current challenges and drive profitability. The focus on operational efficiencies and strategic initiatives will be key to achieving these targets.
Key takeaways. In summary, Chemed's fourth quarter results show stable revenue but highlight some profitability challenges. The company is well positioned financially with no debt and a strong cash reserve. Looking forward, the 2026 guidance is optimistic, suggesting potential growth. Thank you for joining us, John, and thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Chemed's performance in the comments below.
Thank you for having me. It's been a pleasure discussing Chemed's financials. I'm looking forward to seeing how the company navigates the upcoming year.